Good morning, guys. How are we all doing? I am Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4-hour charts. So yeah, Bitcoin on the 4-hour. What we have is not much really. we're still sort of in this range. We're holding above, well, at least the wicks, most of the candle closes from this bounce here, holding above these lows from down here. So we're obviously precariously placed at this level. So if we do trade and close lower than here, then I mean realistically you'd expect us to take out this low, and then we'd probably have to expect to test back into this support area. The more times you keep testing the support area, obviously the more chance you got it of breaking. I mean, we have broken it a few times recently. On all the occasions testing into it, we've practically broken it. Well, I guess not these, but the main ones. But we were managed then to basically swing failure back above. So it is pretty important support, tried and tested support, but we don't want to keep testing it because obviously the more we test it, the more likely we are to break. We are hanging around obviously closer to these recent highs than we are the underside of this support. So that is obviously good. If we trade back up here, trade above these levels, we could easily see an acceleration to our next level around 17.5, and then potentially even onwards over time to 18.5, which I think is one of the main levels. The thing is we've got big data points this week. We've got obviously Fed and CPI tomorrow, Fed later on in the week. So anything can happen realistically, just depending on what the number comes in at and what the Fed says. So yeah. But I'm struggling to talk as well this morning because I can't breathe through my nose at the moment because I have a slight broken nose. You know how it is. But yeah, so struggling a bit there. I guess this is one of the days where it helps to be facing away from the camera, so you can't see like my couple of pretty swollen black eyes at the moment as well. But hey, anyway, shit happens. But yeah, stock market is not looking ideal here. We have this trend line. Depending on exactly where you broke it, we probably, sorry, depending on exactly how you drew it, I don't think it's difficult to draw it in a way that we've not broken it. So currently the underside of that, the longer we do trade sideways under that trend line, I think that the longer we're going to have a basically well, just the more chance we've got then of obviously this being a local high trading down and then obviously potentially putting in new lows. So that is not ideal. I don't think you can hear some beeping in the background. I'm not sure if I've left the fridge door open or whether it's outside. But yeah, so stock's not looking good here. The DXY though is not looking too bad. Still in its downtrend, looking like it's printing a sorts of bear flag. So another leg down would be nice. We are below this important level of resistance. Still clearly in a bear trend on the medium time frame, so ultimately that can continue and feed through to the larger time frame, and then, well, I guess things will start to look better then. Oil not looking good from a potential recession point and a China opening point of view. No, it's beeping stopped, so it wasn't my fridge, must have been outside. So yeah, we are in a big area of support. I mean, it's a wide range of wide support area. This is kind of like these areas here, like so above here and below here, I think is where oil will probably stay for a while. So I mean, obviously we lose this, it'll be curtains. But can we see that happening? Are we really going to be going into $50-$40 a barrel oil? Is that really going to happen in this current environment? I do think how low we've got now is way lower than what a lot of people have been expecting, or the oil secular bulls were a lot lower than they expected. So yeah, can we continue lower? Who knows? Gold making a move above this level of resistance, and this is this important level of above this previous level of resistance. Obviously now should act as support, and below this what I think is one of the most important levels of resistance for gold. Getting close above 1880, spend any amount of time above there, I think realistically we can head easily into the 2000s. Right, what I think is happening, obviously we've got data points this week that can drive the market one way. What I think is happening, a lot of people are saying stock markets are massively overvalued here. Technically they are. If we're going to go into a recession, the earnings per share, the multiple compression, compression that we should multiple expansion that we should expect, that will then give a lower stock price, does indicate stocks considerably lower than this. But what I think potentially is happening is that I don't think the Fed is going to get a handle on inflation. Gold is looking quite strong here. Obviously stock markets are looking stronger than you would expect. I don't basically stocks and obviously gold as well are a hedge against inflation, and I think that the Fed, I personally think what is getting priced in is the Fed isn't going to win this battle with inflation, because its hands are relatively tied with things that are going to fall apart and break with the rates they've got them at now. And if they keep raising them, they know there are acute liquidity problems. They know that the debt servicing for even just the US debt is not going to be very easy. So I think the market is sniffing out the fact that we could go into obviously an inflationary recession or inflationary downtrend, and that doesn't mean stocks have to go down, because obviously stocks are a hedge against inflation. Because inflation is high, then the companies are going to be charging these higher prices. I mean, their margins might get cut a bit, but they still, like, their actual dollar value has to inflate higher with obviously just the higher well, if we're talking Zimbabwe, just with the higher amount of zeros that you have to put on the end of everything. But obviously that's an extreme case, but maybe it is indicating the start of a potential crack-up boom, that Ludwig von Mises crack-up boom, and we are going to end up with stock markets inflating higher, even into a worse economy, because like the Fed has done an admirable job getting as high as it has now without blowing everything up. So kudos to them for that. I didn't think they'll be able to do it. Lots of people didn't, but they did. But realistically, how much higher and longer can they go before even that? Whatever they're gonna do, whatever they're gonna call it, however they're gonna cook the books and do it, they are going to be adding dollar liquidity to this system. It is going to be inflationary. It is going to weaken the dollar, which the dollar itself is reflecting that. It is going to weaken the dollar, and it is going to obviously be inflationary, even though they're going to try and call it whatever they're going to try and call it, however they're going to try and do it. They're going to think of a new name, a new thing, and they're going to call it temporary. They're going to do whatever, but they are going to be doing things, things that we know and things that we don't know of, to try and increase liquidity in this market, because liquidity is drying up fast. So yeah, that's what I think is happening there. Ethereum, let's go back to crypto. Ethereum Satoshi pairing, just not doing a whole lot of nothing. What you would hope is that this is a bull flag after this move up, and then we take another leg up towards these recent highs. But obviously this is an important level of resistance, this is an important level of support. We're just in the middle of it at the moment. The USD pairing, similarly, just hovering, not doing a lot. You'd hope this would be a bull flag, hovering below this resistance. It's doing a good job holding below here and not accelerating to the downside, after basically failing on multiple times to get above. Yeah, if we do get a break push up, then yeah, we could see a pretty significant move up in Ethereum, as obviously this is a good place to short and have stops around, not too high above price action. So obviously if we do clear that, then those shorts will cover and it could accelerate the upside. 10-year yield did bounce back briefly above this old support, new resistance, but is now getting resisted by said resistance. Is this going to print in a bit of an inverted head and shoulders bottom and continue up? We'll have to see. We shall have to see. Stochastics, let's look at them. I guess short term not looking good, medium time maybe looking better. However, 4 hour is not looking bad down here, turning up from a low level. But yeah, 10 hour pointing down, plenty of room to run. 12 hour pointing down, plenty of room to run. Daily is actually turned up here, so that is not a bad read. But this is where we're getting through to the higher time frames that I think will start to not look so bad. This buy daily read is brilliant. This is what you want to see on stochastics. This is into the bullish zone, a higher-ish time frame, looking good. 3-day pointing up, obviously not as straight up, but pointing up at a low level. 5-day turning up from a low level. Weekly turning up, actually freshly now turned up from a low level. this is turned up as well from a low level, but it's not really moving up, even though it's just turned up, and then obviously monthly is doing that. So I mean, it's not the worst read. It does look like we could have had put in the low, even if we do test back down towards there. And then we play out a decent bounce. But obviously a lot will depend on the Fed, what the Fed does, what the Fed says. But like I said, I think the Fed is going to struggle to do much, even if it says one thing and then provides liquidity. The other hand, that old meme, it'll take from one pocket, it'll probably put your money into your hand and then take out your back pocket. Sort of meme. It knows what it needs to do. Yeah, it is a difficult environment for the Fed. Yeah, so there we go, guys. That is it. Remember, this is not financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys soon.